There are about 18,000 autos in the backlog in the US. In the final hour of the day, this stock recently increased by 2%. Here, buddy, I'm changing gears at a place without any gears. I'm changing gears here. In China, the backlog currently stands at 13,000 cars. As a result of all these announcements about their recurring revenue, the company is changing their business model, which is fantastic, but at the same time, people will be using a different little connector to charge their electric cars every single time. No, they're not. So here's the thing. If you want a Tesla right now, the wait time is the lowest it's been in years, and they're providing 3 years of free supercharging. So this is going to be the ultimate commodity. There's such madness going on here. People and everyone assumes this is normal. I just don't understand. Have you heard about Tesla's incredible stock rise over the last 10 days, which has many bears in a panic? We'll go back and look at some of the most outspoken opponents, like Tim and Dan, and how their positions have changed in response to Tesla's unrelenting growth. Next, we'll turn our attention to Tesla's energy business, a sector that is finally receiving the attention it deserves. Morgan Stanley's updated energy model suggests that Tesla Energy could surpass the automotive division in value with innovations like the MEAP pack and significant increases in energy storage deployments. Tim, who was once a staunch Tesla skeptic, has changed his mind, and Dan is still struggling with the stock's explosive rise. Tesla Energy is ready to upend established market norms. Whether you're a seasoned investor, a Tesla enthusiast, or someone searching for health and wellness advice, this video will provide you a thorough grasp of Tesla's present market dynamics and the expanding energy industry. There is something for you in this video, so please remember to hit the like button. Get Tesla stock news now and check back soon for more thought-provoking articles. Let's get started. A recent CNBC clip shows before the video begins, Tesla's remarkable 10-day stock increase is highlighted. It's also important to note that Melissa Lee's previous facial expressions frequently convey a lot of information. Tim, who was a harsh opponent of Tesla and foresaw its demise, had a dramatic change of heart. He was well known for shorting Tesla's shares, and his wagers now backfired. Dan Nathan of Risk Reversal Advisors, who appears to have tantrums whenever Tesla's stock rises, has been brought on by CNBC. Although it's only a theory, Sora's extreme reactions to Dan's antics hint that his outbursts may be caused by financial losses he suffered when shorting Tesla. Melissa Lee's reactions to Dan's antics are priceless. May she be secretly taking pleasure in Dan's discomfort. The conversation starts with Tesla's explosive stock run, which raises the question of when those robot taxis will be on the road. A few months ago, Tesla's stock fell to about $138, and it is currently at $262. Investors were concerned about car deliveries at the time, but those worries were misguided because the automotive industry is cyclical, and there have been supply chain disruptions and vehicle shortages recently. Volatility in the market is anticipated. The short-term swings don't faze long-term investors. You're probably thinking of road taxes and other futuristic advancements if you're thrilled with Tesla's stock jump. But let's go back to when Elon Musk redirected around $500 million. Some people thought this was a favoritism move against Tesla, but it was actually a calculated maneuver. It made reasonable to have the NVIDIA GPUs shipped to xAI before Tesla's facilities were ready because the company wasn't ready to use them. This avoided having the costly hardware site idle and kept Tesla's balance sheet intact despite IAL negative spins. Tesla had a good plan. The 100 NVIDIA chips are essential for creating a network of robocabs, but they need a fully furnished facility to function. If Dan were unbiased, he would see that delaying delivery was a sensible decision. With bears taken off, surprise and short sellers going too deep on Tesla, the market has been extremely unbalanced. The company's recent deliveries have above forecasts, and their battery storage division, which had been operating beneath the radar, has seen a 100% surge. Even while Tesla has quadrupled its quarterly energy deployments before, this increase in energy storage is finally drawing attention. With Rivian and Chinese EV companies among its competitors, Tesla has firmly established its position. Despite this, short sellers frequently push the stock lower only for it to rise again, causing severe financial hardship. There are even rumors that some Tesla short sellers may even take pleasure in these, whether someone agrees or disagrees with financial explosions. It's obvious that wagering against Tesla frequently backfires, even though the stock may continue to rise. Since the company is currently in an overextended period, some advise selling now and waiting for a better time to re-enter the market later. However, this plan entails paying capital gains taxes and hope that the price will decline sufficiently to make it profitable. Given its volatility, Tesla may go either way, but with autonomy approaching, the stakes are enormous. If autonomous taxis become widely used, Tesla's value could, given the potential at stake, skyrocket. May be foolish to take the chance of selling now. As more individuals become aware of Tesla's energy storage business's actual potential, the narrative surrounding the company is changing. For a considerable amount of time, Elon Musk has been predicting that Tesla Energy might surpass its automotive division in size. With Morgan Stanley pointing out that generative AI is fueling a multi-generational surge in energy consumption and that Tesla's Q2 energy storage beat has sparked increasing interest, Wall Street is beginning to catch up. The scale at which Tesla is willing to operate is demonstrated by its mega factory in Lower California, which can produce 10,000 megapacks a year. The earnings from a fully utilized facility is equal to the sales of 1 million Teslas. A startling contrast that shows how profitable the energy industry is when Wall Street starts to take these things into consideration. The story of Tesla is evolving and is no longer only viewed as a car manufacturer. Tesla is seen as a significant energy market participant that has the ability to upend established energy industries. The company is positioned to benefit from the growing global demand for energy solutions due to its strategic focus on energy storage, innovation, and scale. This focus in the energy sector of Tesla is similar to what we may soon observe with faster and more widespread use of Tesla's driverless cars could result in significant financial gains. With a fresh perspective on Tesla's potential, Morgan Stanley has increased its energy forecasts while decreasing its automotive projections. There is a theory that Morgan Stanley may be downplaying their energy forecasts in order to avoid setting an unrealistic price target for Tesla. They may be attempting to balance their estimates in order to avoid ridicule regardless. It is important to note that when analysts discuss market penetration, they mean new vehicle sales rather than the total number of vehicles on the road. It's difficult to believe these analysts when their updated energy estimates conveniently offset their reduced EV adoption estimates for 2030, resulting in the exact same price. Tesla's energy business has seen heightened investor interest driven by AI advancements and significant quarterly performance following a recent deep dive into Tesla's business. Analysts updated their Tesla energy model while keeping their $310 price target unchanged. According to the Smell, they seem to have modified their automotive forecasts to account for the growth in the energy sector, which raises doubts about their approach. The U.S. battery electric vehicle penetration rate dropped from 25% to 20% due to rising Chinese protectionism and a resurgence in hybrid vehicles. As a result, Tesla's energy business now trades at $50 per share, up from $36 previously. Their forecast for 2030 Tesla auto sales has been lowered from 6 million to 5.7 million, resulting in a $15 share reduction in their core valuation. Solar deployments have slowed while storage has increased. Currently, 95% of Tesla's energy revenue comes from its energy storage business, which is predicted